Hello dear traders, you're watching the latest financial calendar on Insta TV with me, Anna Kasatkina. Early next week, traders will eye the following economic events. On Tuesday, the Bank of Japan will announce its decision on the key interest rate for July. Experts do not anticipate any changes. They suppose that the Bank of Japan will keep unchanged the lowest rate of -0.1%. During the previous meeting, the Bank of Japan maintained its ultra-loose monetary policy. The Monetary Policy Committee voted to keep the benchmark interest rate at -0.1%, also downgrading its view on inflation, signaling that it will lag well behind its US and European peers. As widely expected, the Bank of Japan kept its short-term interest rate target and a pledge to guide 10-year government bond yields around 0%. That move contrasts with the European Central Bank's decision to end its asset purchase program this year and the US Federal Reserve's steady rate increases. Meanwhile, on Wednesday, the US is set to release the ISM manufacturing PMI for July. A reading of 5,359.8 is anticipated by economists. Let us remind you that the ISM manufacturing index rose to 60.2 for the month of June, up from 58.7 previously, when economies had looked for it to ease back to 58.2. The latest ISM manufacturing PMI survey suggested the United States widened its lead over the rest of the world economy during June, refocusing markets' attention back on divergence between monetary policies across the world's largest economies. Later on Wednesday, the Federal Reserve will reveal its decision on the benchmark interest rate for August. Analysts expect that the key interest rate will be kept at 2%. At its June meeting, the Federal Open Market Committee hiked its target overnight funds rate by a quarter of a point to a range of 1.75% to 2%. At the same time, it raised the interest rates on excess reserves by 0.2 points to 1.95%. The central bank seeks to unwind the programs it initiated to pull the economy out of the financial crisis. The Fed kept interest rates at historically low levels and bought up nearly $4 trillion worth of treasuries and mortgage-backed securities in an effort to keep rates anchored and maintain liquidity flow through the financial system. Recently, the Federal Reserve has said it expects that low unemployment and rising inflation will keep it on track to raise interest rates at a gradual pace over the next 2 years. Also, the following statistical data is on tap at the beginning of the next week. On Monday, a consumer price index will be out in Germany. On Tuesday, a manufacturing activity report will be published in China. Germany will release retail sales data. The Eurostat is going to report on inflation and GDP for the euro area. The US will print statistics on personal spending and consumer confidence. On Wednesday, New Zealand is to report on jobless rate and employment. And the UK is to share manufacturing activity data. You have watched the latest financial calendar on Insta TV. See you back soon and have a great trading day.